All right, hello everyone and welcome back. Tax season is definitely in full swing, and that big deadline is looming.
It certainly is. April 15th, 2025. That's the date etched in everyone's mind right now.
The last day to get your federal income taxes filed or, crucially, to request an extension.
Exactly. The IRS was expecting a huge number of returns, well over 140 million for the 2024 tax year.
And they'd already received, what, over 100 million by early April, so people are filing?
They are, but many still have work to do. So you're basically looking at two main options as that date approaches.
File by the 15th or file for an extension. Simple as that, right?
Well, simple in concept, yes. And if you find this breakdown helpful today, definitely hit that like button and subscribe for more updates.
Good point. So let's dig into option one, filing by April 15th. What's key here?
Preparation, really. Making sure you've gathered absolutely all your necessary documents, W-2s, 1099s, receipts, you name it.
And ensuring the return itself is accurate. Rushing leads to mistakes.
Absolutely. But what if you just can't make that deadline? Maybe you're waiting on a form, or life just got in the way.
That brings us to option two, the tax extension. How does that work?
Okay, so an extension gives you an automatic 6 additional months to file your return. That pushes your filing deadline out to October 15th.
6 extra months to file sounds great, but there's a catch, isn't there?
A very important one. An extension to file is not an extension to pay. This trips people up all the time.
Right, so any taxes you actually owe are still due on the original deadline, April 15th.
Correct. If you don't pay what you owe by April 15th, you'll start racking up penalties and interest, even if you got the filing extension.
Okay, so how does someone actually request this extension, assuming they realize they need one before April 15th?
Several ways. The main one is filing Form 4868. That's the official IRS form for an automatic extension.
4868. Can you file that online, or is it paper only?
You can do either. File it electronically, often through tax software or an IRS e-file partner, or you can mail in a paper copy.
And is there a cost? Do you have to pay to file Form 4868?
No, there's no fee just for filing the form itself.
Okay, what info do they need on that form?
Basic stuff. Your name, address, social security number. And crucially, you need to provide an estimate of your total tax liability for the year.
An estimate. So you still need to have some idea of what you might owe.
Exactly. It forces you to at least ballpark your income and potential tax.
Are there other ways to get the extension besides that specific form?
Yes, a couple of convenient ones, actually. If you make a tax payment electronically through the IRS website,
Their make-up payment page.
right, there's usually an option or a drop-down menu where you can indicate that the payment is for an extension. Doing that often counts as requesting the extension itself.
Ah, okay. So paying part of what you estimate you owe can automatically trigger the extension request?
Often, yes. Same goes if you use IRS Free File. There's an electronic option there to request an extension, and many online tax payment services have a similar checkbox.
So multiple paths, but the deadline for all of them is still April 15th.
Absolutely critical. Miss that date and you can't get the automatic extension.
Makes sense. Why might someone lean towards getting an extension in the first place, besides just procrastination?
Well, avoiding rushing is a big one. Fewer errors if you take your time, but often it's practical. Waiting for documents is very common.
Like for business owners waiting on 1099s or investors waiting on K-1 forms from partnerships.
Exactly. Those forms sometimes just don't arrive until close to or even after the initial deadline. Complex investments often mean delayed paperwork.
What about life events?
Sure, a major illness, a death in the family, a move. Things happen that can completely derail your ability to focus on taxes. An extension provides breathing room.
And you mentioned financial stress too.
Yeah, unfortunately, sometimes people are stressed about potentially owing money, and it leads to avoidance. An extension can help separate the filing task from the immediate payment stress, though the payment is still due.
Okay, let's pivot to the scary part, penalties. You mentioned them earlier. What happens if you file late without an extension?
That's the failure to file penalty. It's hefty. 5% of the unpaid taxes for each month or part of a month that your return is late.
5% per month. Ouch. Is there a cap?
Yes, it caps out at 25% of your unpaid tax liability, but 5% a month gets you there pretty quickly.
Okay, and what about the penalty for not paying on time, even if you got the filing extension?
That's the failure to pay penalty. It's lower, but it still adds up. It's typically 0.5%, 0.5% of your unpaid taxes per month or part of a month.
And that also caps at 25%.
Yes, also capped at 25%. But importantly, interest accrues on top of both the unpaid tax and the penalties, and that interest compounds daily.
So the message is clear. Even with an extension, estimate and pay as much as you can by April 15th to minimize or avoid those penalties and interest.
That's the single most important takeaway regarding extensions. Pay by tax day.
Good advice. Now, quickly, for self-employed folks or those making estimated payments, any key dates they need to remember for 2025?
Yes, the quarterly estimated tax deadlines are important. For 2025 income, those dates are April 15th, June 16th, September September 15th, and then the final one is January 15th, 2026.
Okay, worth putting those on the calendar. Let's shift gears now to some of the tax law changes for the returns people are filing in 2025 for the 2024 tax year. Standard deduction first.
Right, the standard deduction amounts have increased again due to inflation adjustments.
So for single filers,
It's gone up to $14,600. That's up from $13,850.
and for married couples filing jointly.
That's now $29,200, up from $27,700. Same amount for surviving spouses.
Head of household.
$21,900, which is an increase from $20,800.
So if you don't itemize, this automatically lowers your taxable income. A nice little bump.
Definitely. It means more of your income is shielded from tax right off the bat.
And what about the tax brackets themselves? Did the rates change?
The rates, 10%, 12%, 22%, etc., stayed the same, but the income thresholds for each bracket have shifted upwards, again because of inflation.
Meaning you can earn a bit more money before being pushed into a higher tax bracket.
Exactly. For example, for single filers, the 10% bracket now goes up to $11,925 of taxable income.
And the 12% bracket.
That runs from just over $11,925 up to $48,475.
Okay, and it keeps going up from there. We don't need to list every single threshold, but the point is they've all nudged higher.
Correct. Same principle applies to the brackets for married couples filing jointly, just with higher income levels for each bracket. For instance, their 10% bracket goes up to $23,850.
So worth checking where your income falls in the new 2025 brackets. You might be surprised.
You might. A small raise might not push you into the next bracket like it could have in previous years.
Good to know. What about retirement savings limits? Any changes there for 2025 contributions?
Yes, some increases there too. For 401ks, the employee contribution limit is up to $23,000.
Up from $22,500. And IRAs, traditional and Roth.
Those limits increased too, up to $7,000 per person. That was $6,500.
Did the catch-up contributions change for older savers?
No, those stayed the same. It's still an extra $7,500 for 401ks if you're 50 or older, and an extra $1,000 for IRAs.
Okay. And health savings accounts, HSAs, limits changed there.
They did. For self-only coverage, the max contribution is now $4,150.
And for family coverage.
That's up to $8,300.
And the catch-up for HSAs, that's still there for those 55 plus?
Yes, that additional $1,000 catch-up contribution for those 55 and older remains in place.
All right. One more key area, the Earned Income Tax Credit, or EIPC. Any adjustments?
Yes, the maximum credit amounts and the income limits to qualify have both increased slightly for 2025.
This is a really important credit for lower to moderate income working families.
Absolutely. For example, the maximum credit for a family with 3 or more children is now $7,830.
And it scales down based on the number of children and income level.
Correct. With 2 kids, the max is $6,960. 1 child, $4,213. And even for workers with no qualifying children, there's a smaller credit available, maxing out at $632.
So definitely worth checking eligibility for EITC, especially with the adjusted income limits.
For sure. Don't assume you don't qualify. Check the current rules.
Okay, with all these rules, changes, deadlines, when should someone seriously consider getting professional tax help?
Well, obviously, if you're feeling completely overwhelmed or lost, that's a clear sign.
Or if you know you owe money but are really struggling to figure out how to pay it.
Definitely. A professional can help explore options like IRS payment plans or potentially an offer in compromise, though qualifying for that is tough.
What about dealing with penalties from past years or audits?
Prime time to get help. Tax pros know how to navigate IRS procedures, potentially request penalty abatement if you qualify, and represent you during an audit.
And even if things seem straightforward, just to make sure you're not leaving money on the table.
Absolutely. Ensuring you're claiming every single deduction and credit you're legally entitled to is a big reason people use professionals. They often spot things you might miss.
The IRS even recommends using reputable preparers to avoid scams, right?
They do. Choosing a qualified and ethical preparer is important.
And you mentioned tax relief companies earlier. What's their role?
They specialize in helping taxpayers resolve issues with the IRS, things like setting up those payment plans, negotiating settlements, dealing with audits, handling back taxes, even amending past returns.
So lots of avenues for help. Is it too late to get help if you file an extension?
Not at all, but don't wait too long. Accountants get extremely busy again leading up to the October 15th extension deadline. It's best to engage them well before then if you think you'll need assistance with the extended return.
Plan ahead, even with the extension. Got it. One last specific area, disaster relief. Does that affect tax deadlines?
It absolutely can. For taxpayers in federally declared disaster areas, the IRS often grants automatic extensions for both filing and paying taxes.
And these extensions can be quite long sometimes.
They can. It varies greatly depending on the specific disaster and location. For example, we've seen extensions granted until October 2025 for California wildfire victims in certain areas.
Wow, that's significant. Any other examples?
Yeah, victims of recent hurricanes like Helene or Milton in several states, or specific disasters in places like Juneau, Alaska, or parts of New Mexico and Kentucky, they often get extensions maybe until May or November 2025, depending on the declaration.
So if you've been impacted by a natural disaster, how do you know if you qualify?
Best bet is always to check the IRS website directly. They have a dedicated section for disaster relief news listed by state. Search IRS disaster relief and your state.
Okay. And they have phone lines too.
Yes, general helplines for individuals and businesses, though they might be very busy. The numbers are usually on the IRS site, but for individuals, it's typically 1-800-829-140.
Good resource to have. Okay, I think that covers the main points for the 2025 tax season landscape.
We've hit the deadlines, the extension rules, the crucial difference between filing and paying, penalties, key tax changes, and when to call in the experts.
The key really seems to be understanding your options and acting proactively, whether that's filing on time, getting that extension request in, or making your payment.
Absolutely. Procrastination is rarely your friend when it comes to taxes. Taking steps now saves a lot of stress and potentially money later on.
Well, hopefully this discussion has provided some clarity as that April 15th deadline approaches.
We hope so. Managing your tax obligations effectively is just part of sound financial management.
Thank you so much for walking us through all of that.
Yeah.
And thanks to everyone listening. If this was helpful, please do give us a like and subscribe for more content like this.
And just a final reminder, this has been for informational purposes. We're not giving specific tax advice. Always consult with a qualified tax professional for guidance on your unique situation.
Excellent point. Take care, everyone, and tackle those taxes.